The following is a presentation of TFNN.
This story began on a nice Florida winter day, December 10th, 2005, when a lone fisherman in Mosquito Lagoon, out near Cape Canaveral, discovered a crab trap that appeared to have something caught inside of it. As the fisherman looked closer, he noticed that a baby dolphin was tangled in a rope that had cut off the supply of blood to the dolphin's tail. The fisherman cut the rope and called for help because he saw this dolphin was struggling. The dolphin, later named Winter, was brought to the Clearwater Marine Aquarium, but too much damage was done to her tail, and it could not be saved. Now, folks, the greatest gift you can give anyone is the gift of your attention. And that is exactly what Winter received from a group of prosthetic engineers who created an innovative new design for a prosthetic tail. Winter, she's doing just fine, and her story of survival and success has gone on to touch others, many, many others. These are folks that need a more flexible prosthetic. We can't control the circumstances of life, folks, only how we respond to them. Circumstances are like the wind. Learn to set a good sail, folks, and let the wind take you to your dreams, your treasures, and your destination. Welcome to TFNN. We're glad you're here and you have our attention.
It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to The Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for starting, folks. This is the Tuesday, September 18th edition of the opening call, folks. So let's get started. I absolutely treasure your presence here today, and my outcome is to help you to become a better money master. But mostly, folks, it's also to provide you with the tools that will help you to lead an inspired life, because leading an inspired life, folks, that is what it is all about. So let's go take a look at one of our tools. This is the tool that I call From Wishes to Desires. How does that sound? Now, to a lot of people, ambition, folks, ambition is kind of a mystery. So think of it like this. The dictionary actually says that ambition is an eager desire for the distinction, for distinction, for power, for fame. You know, but what I want, and I don't really know what that means, but what I do know is let's focus on the word eager. You see, the word eager all by itself, to me, is kind of exciting. How about to you? You know, think about it like this. Kids are eager for their birthday parties. Maybe some of you are eager for your birthday parties as well. You know, I can see all kinds of reasons to be eager for a birthday party. I had one not too long ago. And maybe some of you out there, maybe you're just eager because you were one of the 2 million people that went ahead and got an iPhone during that first 24 hours. Maybe you're eager to get a new car. Maybe some of you out there, in fact, I know this is the case, some of you out there are eager for your next trade, right? So it's things like that. Take me, for example. Each morning, I am eager to be able to get in here, to have the opportunity to spend, a couple of hours with you. Obviously, I kick off things for TFNN here at 9 o'clock, and then Tom and I do the Money Master Show. I couldn't be more eager to be able to do that. Eager is a fun word, so that's why I'm just simply focusing on the word eager. Distinction, power, fame. I like it's an eager desire. That's what I consider ambition to be. And we should all be eager, folks, for what? We should all be eager to live a better life. Do you have that up on your list? We should all be eager to have a better family. We should all be eager to have better relationships. We should all be eager to perform better. We should all be eager to what? To make more money. That's really one of the things that it's all about. That's a good thing. Making money, folks, is absolutely a good thing. Don't listen to anything that anybody else tells you out there. And what I want you to remember is this, mostly this, because when I take a look at the big things that we should be eager for, is you've got to remember that each of us out here are so remarkable. And here's the key, folks. The key is that what we attract into our life are our musts. And it's amazing how remarkable we have the ability to do that. And you have to immediately change those things that are on your list that are shoulds and coulds. You have to change those into must. The backbone of eager, folks, is what? It's desire. It's the desire to change mostly your disciplines out there. It's usually your disciplines that keep you from getting what it is that you want. If you want to be ready for tomorrow, what do you need to do first? You need to finish preparing for today. If I want a better life tomorrow, what do I need to do? I know it means that I've got to start working on it right here, right now, today. Folks, live in the moment. Make today count. Why? Because tomorrow is counting on it. So let's go take a look at these markets out here. Let's go see what we can count on in the markets right now. You've got the Dow futures off just a bit. If you're watching us on Tiger TV, maybe you're catching the ES mini screen that we've got up. If you're listening on the radio, or maybe you're listening on your mobile device, thanks so much for doing that. You can always catch an archive of this show on Channel 9 right now. We can see right now the ES mini here trading out at 1453. Very flat market. Really been in a pretty flat market ever since the run-up from Uncle Ben's wild rice. That exhausted itself right at about 2:30 in the afternoon on September 13th when it made a high of 14.57 and a quarter. We're at 14.53 right now. We can see if we just take a look at the where the ES Mini broke out of. And where area it broke out was really at about 10:30 in the morning on September 13th. It was down at 14.29. So if we just simply track from that low all the way up to the high that was put in at the, let's see, the exact time frame here. And we're looking at a 30-minute chart at 10:30 on September the 14th. That was out at a price point of 14.68. So if you just simply go from the low to the high out there and you use your retracement ruler, you know on your retracement ruler you're going to have 0.382, 0.618, 0.786. Those are really the three numbers that you need to have on there. We can see that right now you've got the ES Mini trading right at that 0.382 level. I mean, truly right at it. It's traded just slightly below it. It would make sense to me. Now, the market is very overbought. Now, yesterday's pullback was good. You had the Dow off 40 points. You had the S&P off 5 points. Everything down maybe about 0.3%. The Russell 2000, though, you know, a little bit weaker out there, down about 0.7%. So in an overbought situation, you know, the market is going to work that off either by moving sideways or moving lower, and that's what the market absolutely needs to do here. Would not be a surprise for me to see the ES Mini pull back into the 1443, maybe even 1436 level. That, quite frankly, would be healthy for it to do it. The sooner the better, so that this market can continue moving forward, because that's what it wants to do. It wants to do that because certainly the injection of liquidity that was started a long time ago. Quite frankly, it's an injection of liquidity that started over a year ago. In my newsletter, I've shown my clients a new way of being able to track liquidity by understanding what the big commercials are doing out there. Folks, if you'd like to understand that, go to the homepage at tfnn.com. Click on my name. It'll take you to the newsletter link out there. I absolutely will teach you something. In fact, you can have my education services for the next 30 days, unconditional money-back guarantee. But what we do know is that what's going on in the marketplace, quite frankly, isn't a result of QE3 that took place a couple of days ago. It's really a result of what took place a year ago by being able to track what the large commercials are doing out there, the large commercial banks, the large traders out there. And that's what we took a look at in my newsletter. And it showed that actually last week was going to be putting in a pretty decent low through the end of the month. Now, how a year ago, I don't believe that all these folks got together knew that QE3 was actually going to be on the table come last week, but it is, and I do believe that the lows of last week, those are important lows. Look, if those lows get taken out, if you get it closed, not tested, you know, lows can be tested. If those lows get taken out, well, that changes the whole kit and caboodle out there. But until then, I do have my horns out. All of them are out. They're nice and shiny. Might be invisible to you. They are not invisible to me out there. Let's continue to take a look at these markets here. You've got the King Dollar up about 88 pennies right now. Gold off $5. In fact, let's actually switch over and take a look at oil, because really all the talk of the news was about oil yesterday. The question, there was a big sell-off in a quick period of time. Everybody kind of looking as to what was that. You know, there's all the theories out there. Maybe it was fat fingers, rumor-based. And if we're taking a look right now, we're taking a look at the continuous contract for light sweet crude, trading out at 96.07, 96.08 right now. Let me actually pull this back here a bit. And we'll pull this back, and we'll come take a look at the highs that were put in here. Now, these are most recent highs. This goes back to March 1st, out at 110.55. Just simply showing you a trend line. That trend line, the next touch point is the high of really May Day, May 1st, out there at 106.43. What we can see is that oil broke through that area. Now, I wouldn't say it did it with conviction. It broke through there, broke through the trend line. When you break through a trend line, this goes back, you know, a decent amount, from March to September. So we're talking about 6 months out there or so. So it broke through a fairly decent trend line. When you break through a trend line, you're supposed to come back and touch it. Yesterday, it actually closed just slightly underneath that trend line. But what it didn't do yesterday, what it did not do in the case of oil, even though there was a big pullback, the reality is it did not take out that sideways trading range. That is, I'll blow this up here on the screen for you so you can take a look at it on TigerTV. You can see two sideways trading ranges out here. We'll just simply call it a sideways box. The high of that box really was and still is the high that came in, let's say August 24th, out at 97.17. The low of that box range down at the August 30th date out at 93.95. Now, if you take from the high to the low, it's going to be $4 and change. I'm just going to simply round it to $5. You can see there's also an A to B equals CD up that takes you to 102.49. So we're going to call that 103. If we just simply measure the retracement, a B to C retracement, folks. When I talk about a B to C retracement, the markets are always continuously breathing, whether it's a daily, a weekly, a monthly. It just depends on what type of a trader that you are, or investor that you are. Maybe short-term, intermediate term, long-term. I can tell you long-term, the market is absolutely bullish. Intermediate term, the market is bullish. Right now, from a short-term, depends on how you're going to define it, the market needs to work off the overbought situation. It needs to pull back, needs or move sideways for a period of time. I suspect that's what we have going on. In fact, if you take a look at the volume yesterday, the volume pulling back nicely. So for any of us that are bulls out there, that is what we want to see. Now, if you take a look, let's come back here at light sweet crude. What you can see here is the B to C point is where you see a major change in price trend. Well, if you take a look at coming off of the lows, the light sweet crude made a low June 29th out at $82.10, made pretty much a straight line move up into a high that came in at July 19th. The market price really changed then for just a few trading days, and the pullback there was to that 0.382 level. Now, when you only pull back to 0.382, in this case here, you've got it building energy, building sideways cause to move higher in this rectangular box. It has done it twice now, and it's lost a little bit of its strength doing that. But it really says that what light sweet crude wants to do is it wants to trade up to 107. That says, yes, that says most likely that the U.S. dollar index would get weaker, the euro would get stronger. I do believe that that is what we will see. It doesn't have to happen today, but when you take a look at that sideways box and you take a look at the sell-off that everybody was talking about yesterday, the very first thing I had to do was go take a look at my chart to see what the heck was it really doing. Well, folks, all it was doing, number one, it was testing that trend line that it broke. It's trading below it here this morning. Looks to me like, quite frankly, if you were taking a look, if you were an intraday trader, the trade setup is actually pretty easy. The trade setup would be if you could get light sweet crude to pull back into the 93.95 level. Do it on less than 185,000 contracts. Reject that price. In other words, you'd like to see it get, well, it doesn't matter whether it gets 93.94 or 93.95, somewhere in that range. And then you could take a trade. I think it's the UCO moving higher because your back is up against the wall. And what that means is that if that sideways box truly gets penetrated to the downside, meaning you get a close below the 93.95 level, it says go ahead and take the trade off. Take a small loss if you got in that trade, but otherwise, light sweet crude, even though people are talking about what happened out there, I can tell you technically was no damage done in light sweet crude. 877-927-6648, folks. Give us a call. We'd love to hear from you.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Let's go take a spin around the world here, see what the markets are doing right now. You got the DAX off 51 points, about 0.7%. FTSE down about the same percentage-wise. That would be off 35 points. Over in Asia last night, everything traded lower. You had the Nikkei down 36. Excuse me. The Shanghai off 20 points and the Hang Seng down 56. The Hang Seng really hanging in there, only off less than, it looks like about 0.2% out there. Hang Seng, 56 points, almost 0.3% out there. What we're taking a look at here right now is we're taking a look at the DAX, looking at the daily chart on the DAX. Let's start over in Germany. What you can see out here on my charts is you can see the 1 to 1.272 A to B equals CD down. It's made both a 1 to 1.272 A to B equals CD down as well as a 1 to 1.272 A to B equals CD up. Now, take a look at the formation out there, and let's start with the A to B equals CD down. Let's take a look at the swing point that was established March 16th. 2012 out at 71.94. That's your A point. Your B point is where the DAX moves down into April 23rd. Does that, makes a low 66.68. And then does a retracement. Now, let's just go take a look at the retracement out there. Let's go from the A point to the B. So let's see what that B to C was. And you can see less than a 0.618, so we're going to call it a 50% retracement out there. So it's saying that it still had some energy. But what's important, folks, is that when you're forming your A to B equals CD, make sure that C to D leg that you are creating, make sure that you're maintaining the same price angle, because that is releasing a ton of information to you. There are little subtleties out here in pattern technology, pattern recognition, and you want to make sure that you are using those to your advantage. So if you just simply take a look at that C to D leg, take a look at how price moved off of that C point there when you take a look at the DAX. The way that it moved off told you what? I told you that you were going to do more than a 1-to-1 A to B equals CD. The mere fact that it retraced to less than 0.618 suggested that, hey, be cautious. Why? Because only 60% of the time are you going to do a 1-to-1. The other 40% of the time, it's going to be some other extension of that. 1.272, 1.618, 2.618. Maybe it's a piece of good old American pie. I know they eat American pie. Apple pie out in Germany out there. Now, if you take a look at the price as it's moving down that C to D leg, you can see it's traveling on which side? It's traveling on the strong side there. In this case here, it's traveling on the inside because this was an A to B equals CD down. Was that giving you an indication that it was going to do more than a 1-to-1 A to B equals CD? Absolutely. And then take a look as it's making that D point. It was doing it with what? With a wide-ranging bar. Who was in control here? Who was in control? Absolutely, the bears were in control. Now, You move down June 4th, makes that 1 to 1.272, makes a doji candle out there. That doji candle, you don't know if it's just resting, getting ready to make a larger move down, but certainly what it did show was it showed that there was, at least now, as you got to that 1.272 level, which was about the 59.91 level. And if you take a look at on June 4th, where it actually closed was 59.78. You know, it said that there was now some equilibrium between the bulls and the bears. It gave a moment of pause out there. That happens to be the low came in on the following trading session. That candle out there not really giving you the full indication because it wasn't a bullish engulfing. Well, you could say it was a bullish engulfing candle. I would rather have seen it be a green candle out there. If you take a look at June 5th out there, that's where the low was put in. That's where the next A point of the A to B equals CD up. So take a look at the DAX. Take a look at that same pattern. The A point coming in on June 5th out at 59.14. And if you take a look at the move up, the B point on here coming in on July 20th out at 67.75. So now let's go take a look at that B to C retracement. What was the B to C retracement? I don't even know. I'm just looking at it with you folks. So you can see the same type of retracement on the way up that you saw on the way down. Less than a 0.618, probably about a 50% retracement out there. What does price do as it comes off of that C point? Comes off of it with what? With conviction. You had wide price spread there. You had price moving along the inside path there. And what does the DAX do? It makes a 1 to 1.272, A to B equals CD. Now the question is, what is it doing? You had the DAX close, or not close, but the gap down this morning. Yesterday's candle on the DAX didn't say that it really wanted lower price. All that it's done today is it's moved down into the gap. It's off 53 points as we speak. You can see it's in the middle of its trading session here right now. And so what you really have to do, as you would on any chart, is you always have to step things up a notch or two. In this case here, let's go step it up 2 notches, because I know that all of you out there, you're very ambitious. You all have desires out there, and you're all eager. So when it comes to eager, let's go step things up 2 notches. Let's go take a look at the monthly chart of the DAX. What we can see on the monthly chart of the DAX is it's trading inside the swing point from May 31st, 2011. That high, 7,641. That's where the DAX wants to actually get to. Looks to me low on the monthly chart, the DAX making an A to B equals CD up into the 8,100 level. 877-927-6648. Give us a call, folks. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. There we go. There's our bell. We got the Dow off 32 points, S&P down 3, Composite off 6, small caps off about 3 right now, Microsoft down 10 pennies, Intel up 11, Google up 80 cents, Cisco up 8, Apple down $1.45 right now. Apple trying to make that 700 number. It's going to do it. It's trying to reach. If you take a look at Apple yesterday, Apple here getting up to a price point of $699.80. It wants to make a run up to the 714 level, 713.49. Looks like that might, I don't know if that's the exact 1.618. Let's find out what the exact 1.618. And what I'm referring to there, folks, I'm taking a look at a set of swing points. The swing points I'm looking at are the April 10th high. That's at a price point of 644 even. And the low swing point looks like is May 18th when Apple got down to 528.66, 528.66. So the actual 1.618 expansion of that. So if you took the price difference, again, if you subtracted from, you do this on your own calculator here. Maybe you don't have a expansion tool like I've got on my system here. But take the price point of 644, go ahead and subtract 528.66. Take that number, multiply that times 1.618, and add it to the bottom here. Add it to that 528.66. That's going to give you somewhere very close to 714.38. That is where Apple wants to at least trade to. Of course, Apple is one of those very difficult stock charts out there because all it does is it continues to expand, but that is at least the next trading level that it wants to get up to. Yesterday, as I said, getting up to 699.80. Yes, in the aftermarket, it got up to above 700, but that doesn't count for our work when we're taking a look at the stock charts out here. Let's go take a look at things that are popping and dropping. Popping to the upside, you've got F5 Networks, FFIV, up 5% this morning. It's up $5 and change. Energizer, the Energizer is, we were talking about eager. Well, the Energizer is eager this morning. It's trading up 6%, up almost $4 right now. You got the Diego PLC, DEO is the ticker symbol there, up about $1.74, $1 and change here. Rock, Tennessee, they were down yesterday. RKT, I believe they were down yesterday, up about 2% this morning. You've got, let's see here, what else? We've got Jazz Pharmaceuticals up. Jazz Pharmaceuticals breaking out above its highs yesterday. We'll take a look at that stock chart. JAZZ happens to be there. ticker symbol out there. Used to have a license plate called Jazzy 1. That was because of a jazz station up in the Detroit area when I lived up there. To the downside, you've got Decker's Outdoors, DECK. They're down about 6% this morning off $3 and change. You've got Randgold Resources, making a big run. They're trading down about 2% off $2 and change. You've got Exact Target ET as a ticker symbol. They're down 7% this morning. We'll certainly take a look at that. That's only off $1.80. FedEx out with guidance and numbers down a couple of percentage points off $2. We'll take a look at that stock chart as well. Marathon Pete Corporation, MPC, off 3% here. That's off about $1.70. So let's go start taking a look at what's going on inside these markets with what's popping and dropping. Let's start with what's popping out here. Let's go to F5 Networks. We'll just simply go back and forth. FFIV is the ticker symbol, and gapping up this morning. Let's take a look at the volume. Obviously, we've only been trading here for 8 minutes. But whoops, I think I'm going to have to delete some of these charts out here. F5, though. So let's go back to F5. It's trading out right now 109.55. It looks like, as I said, gapping up this morning, having made a 1-to-1 A to B equals CD down. When it completed that, was in the price range on July 12th, right at around the 88.37 mark here. So this thing here, let's take a look at what this equity's got in store for us. It's got, that's nice. What it does have is a high volume high. So first thing here, if you go back and you take a look at the trading session from April 19th. April 19th gets up to 139.20, does it with 6.2 million shares. That high never was tested. That high was actually going against, did it get over April 3rd? April 3rd was 139.46. You got up to 139.20. Didn't test that. That 139.46 swing point, April 3rd, had 1.3 million shares. As the market came up into it, it came up with 6.2. That says that this actually wants to get back up into that range there. So it's got a high volume high on the daily. Let's just go take a look at the weekly out here. So actually, I want to just kind of write that down here for me, FFIV. High volume high. Now let's take a look at the weekly chart out here. On the weekly chart, it's got a high volume high. Again, that same week, which was April the 19th, and no volume off of the high. Certainly there was some institutional selling as it pulled back into the April 24th week, and there was some follow-through on that during the May 31st level. We'll take a look at those. Those are the areas where it needs to clear the turbulence zone. But F5 Networks, it had a nice breakout here with volume the week of January 19th, where it gaps up off of the January 18th level. Oh, I'm looking at the daily chart. Okay. So I'm looking at the, I thought I turned that to, so I'm looking at the, okay. I thought I turned that to weekly, so apparently I didn't. Let's now turn that to weekly. Okay. Okay, so this does have a high volume high. Of course, there was volume on that in January of 2011, January 21st, 2011. But let's deal here with the let's deal here with this high here. So what it is to F5 Networks is up and over an area that should act as support. If you were in this equity here, you'd be looking for support at about the 103.13. It's at 109.76 right now. That happens to be, looks like a bullish engulfing candle. It is. That had confirmation on the weekly basis. That was July 20th. You can see the body of that candle completely engulfed the prior session. So that was on the daily chart after it was making a 1-to-1 A to B equals CD down. So now what we know is you've got your area of support. Now the support could be the low of that, but right now as this has moved higher, I'd say support is going to be a close below 103.13, and you'd have to get a little bit cautious here. So it looks like this wants to run up to the 139.20 level, and it's at 109.93 right now. That's F5 Networks out there. Let's go take a look at that Energizer Bunny. That's up 7% this morning here. ENR is the ticker symbol. ENR. And as we take a look at that, that is coming against an area where it broke down. So let's go study this stock here. Let's see what it is doing. It has some decent volume here this morning. What is behind this move here? What is behind the Energizer Bunny? Let's see here. They come out with some earnings. Let's see here. They gave an earnings outlook of $6 to $6.20. They're looking at a 70 to 80% cost savings from something. I don't have the detail on that. Well, whatever it is that is moving the equity here, and it's got some volume. So far, 11 minutes of trading, 376,000 shares. Now, what that's coming into is the downdraft from August 1st that had 3.4 million shares. But it should be able to take that out today if, in fact, this... if, in fact, the volume were to keep up on this thing, which we know it's likely not to. This thing here, though, if you do get the volume in it today, you take out, if you get more than 3.4 million shares, Energizer then wants to run all the way up to the swing point high of July 27th out there. That would be $80.36. It's at $80.32 right now. But let's go ahead and pull this stock chart back a little bit further. Let's actually go ahead and put this on the weekly and then the monthly out here, see if there's any other signs. So, let's see here. Okay, well, so, it's just got this pretty big downdraft, but the volume of that downdraft on the weekly, let me refresh my screen. No great shakes out there. I take that back. So you did have volume to the downside, 8.3 million shares. That was the week of August 3rd. That was that daily area that we were looking at. Let's put this on the monthly, see what the Energizer Bunny here is doing. Really, this thing here has been consolidating, came into the supply line here, so this makes sense. So if we take a look at this, and I'm going to go ahead and draw a line across on the monthly chart out here, gives you a pretty clear picture. You've got a downdraft with volume, October 31st, 2008. Now, the high of that level was 82.90. The stock gets up close to it, gets up to 82.23 the month of July 2011. Doesn't have any kind of juice, any type of volume, any type of energy, if we're talking about the Energizer Bunny, to get up over that level. And really what it did was it just started consolidating sideways. So it's been building cause, if you will, since September 2010. The low of that trading range, 63, 64-ish. Really, I would use the October 31st, 2011 low, 62.98. It got down there to 64.36 last month in August. And now it looks to me like what it wants to do is trade up towards the top of that range. That would be in the $82 and a little bit change area. That is on your Energizer Bunny. Let's go take a look at HNI Corp. That is the leader on the way down, both dollar-wise and looks like percentage-wise. Trading off 13% here. Let's see. It looks like they cut their guidance out there. Let's actually see what HNI actually does out here. So HNI is the ticker symbol. That's HNI Corp. Oh, boy. So HNI Corp, together with its subsidiaries, engages in designing, manufacturing, marketing office furniture and health products. Office furniture and health products, primarily in the United States. That sounds like two businesses that ought to go together. Maybe it's health furniture. In any event, they're getting the kibosh this morning. Let's go take a look and see what it is doing volume-wise and where it's trading into. Gapping down this morning and gapping down with the volume. And coming into, take a look at this trading session here. This day, total sell-off, which was April 19th, maybe that was a release of earnings, opens up at $27.95. Actually, you had to gap up that day and just continued to sell off the entire trading session, 806,000 shares. Let's go ahead and put this thing first on a longer term. Well, let's take a look at the daily. So you're trading inside that high volume bar. What does that tell you as this thing is moving down this morning? Where is that going to head to? It's going to at least head back down towards the top of that range or the bottom of that range. You're trading inside that bar. This equity is going to see 24.31 pretty quickly here. It's traded at 26.57, and it very well may go back all the way down to the bottom, the lows of June of 2012. That would take you into the $21 and change range. Now let's go take a look at the weekly and then the monthly chart on HNI Corp out here. So now on the, let's see, it closed out last week at 31.68, 31.61 is where it opened. So you got a bull sash weekly candle, no bullish engulfing out here, but bull sash actually a little bit worse. Actually shows more strength to the downside here, and that says that let's see here. So this, if you take a look at the weekly chart, this says where it's going to run into is October 21st, 2011, 2388 should be the area where this may find some support. At that level, it's going to say, you know, why don't I go test again the June lows or the May lows of 2012 out in that 2160 range. Real quickly here, let's put on the monthly chart, see if there's anything else that sticks out on this chart other than the mere fact that it's been in a downtrend ever since February 2006. when it was up at 61.68. Maybe it doesn't make sense to be doing furniture and health products. In any event, let's go take a look at Decker Outdoor. That's the second equity percentage-wise, not percentage-wise on the way down. They're down 6%, but off $2.70 here. That has been a high flyer. DECK is the ticker symbol. This thing here, well, I guess at one time it was a high flyer. What am I talking about? It was a high flyer, folks, back in October of 2011 when it was traded at $118.90. Today, traded down to $45.17. Ouch. That is a stinger, is it not? And trading down this morning, volume-wise, not too 416,000 shares coming into an area that had 1.3 million shares on September 13th. Look for the low there of 43.76 to give you an indication as to whether that's going to hold or whether this is going to trade all the way back down to the lows in the $40, 20-ish cent mark here. Let's put this on the monthly chart. Let's see what this actually looks like. Forget the weekly. Let's go straight to the monthly chart on this. And this came all the way back, made a 100% move of a move. Where that was coming down to was August 2010. The low out there was 43.20. You got just below that here July when it got down to a low of 39.90. Looks like he created a bullish engulfing candle here last month. However, if you do not close above 49.52, you can pretty much write that bullish engulfing candle off in my book. Pretty close to it. Let's go take a look at what else is moving out here. You got Google up $3 and change. Let's take a look at a stock. Schiff Nutrition. SHF is the ticker symbol. They're having a nice morning. They're up 10, almost 11% here. Their Q1 net income, $6 million versus $4.7. 85 million in sales, and 58 million versus 58 million a year ago. So they've got some pretty nice growth out there. Let's go take a look at the actual equity, see what it is doing. SHF, again, is the ticker symbol. Gapping up this morning. Oh, yeah. I said we're going to take a look at Jazz Pharmaceuticals, so that means we will. We'll do that one when we get back from the breakout here. So this is making all-time highs out here. I believe, let's put this on the monthly chart here. This is Schiff Nutrition. Oh, yeah, it sure is. And this thing here looks like it was an IPO going back maybe to 2004. Let me refresh my screen here. Just simple. Okay, no, even further back. Oh, okay. So this thing truly is taking out all-time highs. The high that this thing was an IPO going back into 1997 got up to a level of 1850. It's at 23.19 right now. Looks like it's got some conviction behind the move. 877-927-6648. Dow off 20. S&P's off 4. We'll be right back, folks.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. We got the Dow off 8 points right now, S&P off 2. Composite trying to get green here off a point. Russell 2000 also trying to get green, down 80 cents here. And definitely stay tuned. Tom and I will be up next doing the Money Masters show. And then we go out to Santa Fe, New Mexico, as we do on Tuesdays and Thursdays, to Kate Stalter, the small cap roundup out there. Then from 1 to 2 today, 12 to 1, I believe, will probably be a replay of the Money Masters show. 1 to 2 is Darryl Martin, 2 to 3 David White, 3 to 4 Ken Shreve, and 4 to 6 the Tom O'Brien show. I mentioned before we went to break, let's go take a look at the Jazz. You won Jazz Pharmaceuticals breaking out yesterday with volume. You can see you had wide price spread and accelerated volume yesterday. This equity here does 4.2 million shares, taking out its swing point highs. You've got a swing point going back to February 29th, 2012. That was at 53.10, only 1.3 million shares out there. You've got another bar out here that was also crossing May 3rd, 2012. That had 614,000 shares. And as I said yesterday, 4.2 million shares. This thing trading at all-time highs, or very close to it, all-time highs being what it did here this morning as it got up to 57.39. Let's put this thing on a week. Well, actually, I'll show you this here. And Tom and I were taking a look at it yesterday. I'm kind of, I have been in and out of Jazz. I have, because I like the Jazzy one, and just simply hadn't paid attention to it here for the last several months. And I could kick myself for absolutely not doing that. Take a look at this equity here. You've had a couple of times here where you've had signs of strength where it gapped up. The first time I'm going to go back to is right here on the day of January 5th, 2012. Closes out at 41.46. You gap up the next trading session. Now, it's a small sign of strength, but yet a sign of strength, 2.6 million shares. Now, I'm going to draw the line across the bottom of where the stock actually broke out, and let's take a look at it. And you can see here that the candle that we're taking, I'm going to also put the volume across the bottom. So let's put the volume across. Now I'm going to put two candles. I'm going to put one in red and one in black. So the one that's in red is going to be, the one that is the more difficult one to hit. The one that I'm going to put down in black is really what the equity is really going against. That is really the gap up day. So I'm looking at the day where it broke out, the prior day. That's the red line going across. So we take a look at this equity, and that volume, just so I can give it to you, was 1 million shares. As the equity pulls back in there, and it pulls back out, I'll blow this up a little bit, pulls back in there with a doji candle, beautiful thing, pulls back there with a doji candle, does volume of 632,000 shares. You get a nice bullish engulfing candle. The next trading session, you get confirmation, the following candle, and that says you're off to the race. Now, what does the stock do? It pulls back and tests out that area one more time. It pulls back and tests with what? 772,000 shares. Still not even close for the easiest one for it to attack. Finally, on June 12th, it says, sayonara, I'm out of here, 752,000 shares, still not enough to bust things to the downside. And sure enough, and that was at the price point there in the $40 and change level. You're at $57.39. This equity here is making a new A to B equals CD up. Let's put this thing on a weekly basis out here. And if we just take a look at the easy, the small A to B equals CD on Jazz Pharmaceuticals. That's going to take this equity to a price point of $59.18. You're at $57.38, more likely $64.24. That is on Jazz Pharmaceuticals, the jazzy one. I'll make sure that I always keep that one on my list as well. But that's, folks, how you want to be able to take a look at breakout stocks. We'll come back to those breakout areas and go take a look at Jazz Pharmaceuticals on your list. Stay tuned, folks. Again, Tom and I will be up next. We've got the Dow trading off 14, S&P's off 3. Folks, from wishes to desires, make sure, folks, that you are out there doing everything you can today for tomorrow, because tomorrow, folks, is counting on it. Take care. I'll see you in the morning or see you in a few. Bye-bye now.